There's a price point that topples governments. Not oil, not gold, not stocks. Bread. When bread hits a specific percentage of a worker's daily wage, revolutions start. Riots erupt, regimes fall, and it's happened the exact same way, in the exact same sequence, across 250 years of history. French Revolution, 1789. Egyptian bread riots, 1977. Tunisia, 2010. The spark that lit the Arab Spring. 3 different centuries, 3 different continents, but the identical trigger. Bread became unaffordable, and within weeks, governments were overthrown. Here's what should terrify you. Wall Street knows this number. Central banks track it obsessively. Food economists have a name for it. They call it the riot threshold. And right now, in 2025, we're watching the exact same pattern emerge again. Food prices are spiking, governments are nervous, and the financial mechanism behind it, the one that's been engineering these crises for profit, is operating at a scale never seen before. Before we show you the evidence, drop a comment and tell us where you're watching from. Because this pattern affects every country differently, and I want to know which places are feeling it first. And if you want the unfiltered truth about how the financial system actually works, not the sanitized version they teach in schools, hit subscribe. This channel exists because people are tired of being lied to about why their groceries cost more every year. Let's start with the history they don't want you to understand. Because once you see the pattern, you can't unsee it. In 1788, France was the most powerful nation in Europe. The king lived in Versailles. The nobility controlled the land. The military was strong. Everything looked stable. But beneath the surface, a crisis was building. A crisis that started with grain. That year, a bad harvest caused wheat prices to spike. By early 1789, bread, which normally consumed about 50% of a peasant's budget, was taking 88%. Think about that. Nearly 9/10 of your income just to afford bread. You can't pay rent, can't buy clothes, can't save anything. Your entire existence is reduced to trying to afford the one thing keeping you alive. The peasants blamed bakers for hoarding. They blamed merchants for speculation. But the real problem was structural. France's grain market was controlled by a small group of elites who manipulated supply to maximize profits. When harvests were bad, they held back reserves to drive prices higher. When peasants couldn't pay, they starved. And when enough people are starving, they stop caring about kings and laws. July 14th, 1789. Parisians stormed the Bastille. Within weeks, the entire social order collapsed. King Louis XVI was eventually beheaded. The nobility was purged. France descended into the Terror, where 40,000 people were executed. The French Revolution, the event that reshaped Europe, started because bread became too expensive. Sound familiar? Fast forward to 1977. Egypt, under President Anwar Sadat, was facing a budget crisis. The International Monetary Fund demanded austerity measures in exchange for loans. So Sadat did what the IMF told him. He cut food subsidies. The price of bread doubled overnight. Egyptian workers, who were already struggling, watched their one affordable staple become unaffordable. January 18th and 19th, 1977. Egyptian bread riots exploded across Cairo, Alexandria, and other cities. Hundreds of thousands of people took to the streets. Buildings burned. Police clashed with protesters. At least 79 people died, though unofficial estimates put it much higher. Sadat, terrified of losing power, immediately reversed the subsidy cuts. The bread prices went back down. The riots stopped. But here's the thing. Egypt didn't fix the underlying problem. They just kicked it down the road. Because when you're borrowing money to subsidize food, eventually the debt becomes unsustainable. And when the subsidies stop working, the riots come back, which is exactly what happened in 2011. December 2010. Tunisia. A street vendor named Mohamed Bouazizi set himself on fire to protest police harassment and economic desperation. But the fuel that spread his protest into a revolution wasn't just political oppression, it was food prices. In 2010, global wheat prices had spiked by over 50%. Tunisian youth unemployment was 30%. Bread was becoming unaffordable again. And when Bouazizi's self-immolation went viral, it ignited rage that had been building for months. Within weeks, Tunisia's president fled the country. The protests spread to Egypt, Libya, Syria, Yemen, and Bahrain. The Arab Spring, the wave of revolutions that reshaped the Middle East, wasn't just about freedom and democracy. It was about bread. Economists analyzing the uprisings found a direct correlation. When food prices as a percentage of income crossed a specific threshold, uprisings became statistically inevitable. Right now in 2025, food prices are spiking again. In developed countries like the United States, people are spending a higher percentage of their income on groceries than any time since the 1980s. In developing nations, it's worse. Countries across Africa, South Asia, and Latin America are watching bread, rice, and cooking oil become unaffordable. Governments are nervous. Central banks are trying to manage inflation without crashing their economies. And the whole system feels like it's one bad harvest away from chaos. But here's the part they're not telling you. These food crises, these bread riots that topple governments, they're not accidents. They're not just bad weather or natural market forces. They're engineered. And the mechanism that engineers them, the financial innovation that turned food into a casino, was created deliberately, with full knowledge of the consequences. Let me show you how. In the year 2000, something changed in global food markets. Something that would directly cause the 2008 food crisis and the 2011 Arab Spring. And almost nobody noticed when it happened because it was buried in a financial deregulation bill that most people never read. The Commodity Futures Modernization Act of 2000, signed into law by President Bill Clinton in the final weeks of his presidency. The bill was written, in large part, by financial industry lobbyists, and what it did was simple but devastating. It removed position limits on commodity speculation. Let me translate that. Before 2000, there were strict limits on how much wheat, corn, and other food commodities financial speculators could trade. The rules existed to prevent Wall Street from overwhelming food markets with bets that had nothing to do with actual supply and demand. Food was supposed to be bought and sold by farmers, food processors, and distributors, people who actually needed the physical commodity. But investment banks wanted in. Because food is the ultimate inelastic demand. People need to eat, no matter what. If you can control food prices, you control humanity's most basic need. So they lobbied to remove the limits. And in 2000, Congress let them. Within a few years, investment banks, hedge funds, and pension funds poured hundreds of billions of dollars into commodity futures. They weren't buying wheat because they needed wheat. They were buying wheat futures as a financial asset, the same way they'd buy stocks or bonds. And when that much speculative money floods into a market, prices detach from reality. In 2007, global wheat production was actually up. There was more wheat grown that year than the year before, but wheat prices doubled. Why? Because financial speculators were hoarding futures contracts, betting that prices would keep rising. And when everyone bets that prices will rise, prices rise, even when there's plenty of supply. It becomes a self-fulfilling prophecy. By 2008, food prices hit record highs. Rice, wheat, corn, soybeans, all spiking simultaneously. Food riots erupted in over 30 countries. Haiti, Cameroon, Egypt, Bangladesh, Mexico, Morocco. Governments fell, people starved, and Wall Street banks made billions in profits from the chaos. You won't believe the name of the bank that led the charge, and the internal documents proving they knew exactly what they were doing. The receipt is wilder than you think. We're about to show you the evidence that turns food into a financial weapon. Let's talk about how commodity speculation actually works, because this is where it gets dark. And understanding this mechanism is the key to understanding why bread keeps starting revolutions. Commodity futures markets were originally created for a legitimate purpose, to help farmers and food producers manage risk. Here's how it was supposed to work. A farmer plants wheat in the spring. He won't harvest until the fall, but he has no idea what wheat will cost in 6 months. Maybe there's a drought and prices spike. Maybe there's a great harvest and prices crash. That uncertainty makes farming incredibly risky. So futures markets let him lock in a price today for wheat he'll deliver in the future. He sells a futures contract to a bread company that needs wheat. They agree on a price. The farmer gets certainty. The bread company gets certainty. Everyone who actually needs wheat benefits from the stability. That system worked for over a century, but it only works if the market is dominated by people who need the physical commodity. Farmers selling wheat, they're going to grow. Food companies buying wheat, they're going to use. The speculation is limited, balanced, functional. Now let's see what happens when investment banks are allowed to flood that market with purely financial bets. Goldman Sachs in the early 2000s created commodity index funds. These were investment products that let pension funds, hedge funds, and rich investors bet on commodity prices without ever touching a physical bushel of wheat. They'd buy futures contracts, hold them, roll them over month after month, driving up prices purely through financial demand. And because these index funds only bet on prices going up, never down, they created permanent upward pressure on food costs. By 2008, financial speculators controlled 60 to 70% of the wheat futures market. Not farmers, not food companies, financial speculators, people who would never see a grain of wheat. And when you have that much speculative money in a market, the tail wags the dog. Prices stop reflecting actual supply and demand. They reflect Wall Street's bets. Here are the numbers that prove it. In 2002, before the speculation explosion, the total value of commodity index investments was about $15 billion. By 2008, it had grown to $317 billion. That's a 2,000% increase in 6 years. And what happened to food prices during that exact same period? The FAO Food Price Index, which tracks global food costs, went from 95 points in 2002 to 238 points in 2008. Food prices more than doubled, not because there was less food, not because of droughts or crop failures, because Wall Street turned food into an asset class and pumped it full of speculative money. The result? The 2008 global food crisis. The World Bank estimated that 100 million people were pushed into extreme poverty because they could no longer afford food. Riots erupted in over 30 countries. Governments scrambled to control prices, some by banning exports, which made the crisis worse for other countries. And the financial speculators who caused it? They made record profits. But it gets worse. Because after 2008, after the riots and the starvation and the global outrage, almost nothing changed. The banks got a slap on the wrist. Some position limits were proposed, but never meaningfully enforced. And by 2010-2011, the pattern repeated. In 2011, food prices hit another record high. The FAO Food Price Index peaked at 238 points again in February 2011. And what happened? The Arab Spring. Tunisia exploded in December 2010. Egypt followed in January 2011, Libya, Syria, Yemen, Bahrain, all within months. And economists studying the revolts found a clear correlation. When food costs exceeded 40% of household income, uprisings became statistically inevitable. Mohamed Bouazizi, the Tunisian street vendor whose self-immolation sparked the Arab Spring, wasn't just protesting police harassment. He was protesting an economy where a young man with a college degree couldn't afford to eat, where food prices had been rising faster than wages for years, where the IMF's austerity policies had gutted social safety nets, and where Wall Street's commodity speculation had made bread unaffordable for millions. The financial mechanism that killed him, that toppled governments across the Middle East, was created in a conference room in Washington, D.C. in 2000 by lobbyists for Goldman Sachs, J.P. Morgan, and other investment banks who wanted to turn food into a tradable financial asset. They knew commodity speculation would drive up prices. Internal documents from that era show they understood exactly what would happen. But they did it anyway because the profit potential was too enormous to resist. This is what I mean when I say these crises are engineered. Not in the sense of a shadowy conspiracy meeting in a dark room, but in the sense that financial innovations are created with full knowledge of the human cost, and the people creating them don't care because they profit from the chaos. Let me give you one more example of how insane this system has become. In 2010, Russia had a severe drought. Their wheat harvest dropped by 40%. So Russia banned wheat exports to protect domestic food supplies. That was a rational decision. But what happened in global markets? Wheat futures spiked by 60% in 2 months. Not because there was a global wheat shortage. Global wheat production in 2010 was actually still near record levels, but because speculators panicked about Russia's export ban and started hoarding futures contracts, betting that prices would keep rising. And when everyone bets on higher prices, prices rise even when there's plenty of wheat in the world. Egypt, which imports 40% of its wheat from Russia, got hit hard. Bread prices spiked. The government tried to maintain subsidies, but the cost was bankrupting the budget. By January 2011, Egyptians were in the streets. Hosni Mubarak, who had ruled Egypt for 30 years, was forced out of power within 18 days, and one of the core grievances fueling the protests was bread, the same trigger that toppled the French monarchy in 1789. The pattern is mathematical. When food costs cross a certain threshold as a percentage of income, social stability collapses, and the financial system we've built, the one that allows Wall Street to speculate on food like it's a stock, guarantees that threshold will be crossed again and again. Because here's the thing about speculation. It's inherently destabilizing. When prices are rising, speculators buy, which pushes prices higher, which attracts more speculators, creating a bubble. When the bubble pops, speculators panic sell, which crashes prices, hurting farmers and creating future supply problems. It's a boom-bust cycle that serves no one except the traders making money on volatility. And it's not just wheat. It's corn, rice, soybeans, coffee, cocoa, everything humans eat. All of it has been financialized. All of it is now subject to speculative bubbles driven by Wall Street algorithms and hedge fund bets that have nothing to do with whether people can afford to eat. The human cost is incalculable. The World Bank estimates that every 1% increase in food prices pushes 10 million people into poverty. So when food prices doubled between 2002 and 2008, that's 1 billion people pushed toward hunger. When they spiked again in 2011, hundreds of millions more. And the next time it happens, and it will happen, the number will be even higher. Because the global population is larger and more urban, meaning more people dependent on purchased food rather than subsistence farming. So where does this leave us? Right now, in 2025, we're watching the early stages of the next food crisis. Wheat prices are rising. Corn and soybean prices are volatile. Rice, the staple for half the world's population, is spiking in several major markets. Climate change is making harvests less predictable. Geopolitical tensions are disrupting supply chains. And sitting on top of all of it, like a parasite on a dying host, is the same speculative financial system that caused 2008 and 2011. The difference this time is speed and scale. Algorithmic trading means speculators can flood markets with bets in milliseconds. Global integration means a drought in one region instantly affects prices everywhere. Social media means food riots can organize and spread faster than governments can react. And the total amount of money invested in commodity speculation is higher than ever, meaning the next bubble will be bigger, the crash will be harder, and the human cost will be worse. Governments know this. Central banks know this. The IMF, the World Bank, the UN Food and Agriculture Organization, they all track the bread price threshold obsessively because they know what happens when it's crossed. But they're trapped in a system where fixing the problem would require taking on Wall Street, re-regulating commodity markets, and admitting that financial innovation killed people. And institutions built on borrowed time, running on borrowed credibility, would rather deny reality than confront it. So the pattern will repeat. Bread will become unaffordable. Riots will erupt. Governments will fall. And 20 years from now, historians will write about the 2020s food crisis the same way we write about 1789, 1977, and 2011. As if it was inevitable. As if no one could have seen it coming. As if the people in power didn't know exactly what they were doing. But you know now. You've seen the mechanism. You've seen the pattern. And you have a choice. You can pretend it's not happening, that the system is fine, that your groceries just cost more because of inflation or supply chains or whatever excuse they're selling this year. Or you can prepare. Financially, mentally, socially. Because the next bread riot isn't a question of if, it's a question of when and where. If this opened your eyes to how the financial system actually works, share this video. Because the more people who understand the bread price pattern, the harder it becomes for institutions to pretend it doesn't exist. Hit subscribe if you want to keep learning the unfiltered truth about money, power, and the mechanisms that shape your life without your consent. I'll leave you with the question that keeps me up at night. Are we wiser now than the people who watched France collapse in 1789, or Egypt riot in 1977, or Tunisia burn in 2011? Or are we walking the same path in better suits, with faster phones, telling ourselves this time is different while the price of bread quietly climbs toward the threshold that topples everything? Thanks for watching.